Hello, guys. Welcome to the Trading Parrot. Today is a very special day. I have a special guest in the background. He's called Matt, and he's from lookintobitcoin.com, a website that combines a look into Bitcoin from multiple angles, not just from the TA, but also from on chain data analysis, fundamentals, and the macro perspective as well. This website is a website that I discovered quite a while ago because it's actually free. Most of the content you can access directly without having to pay anything. And I really like it because it gives you a macro perspective. You can find a combination of all these aspects into a single thing. So I decided to invite Matt and get in touch with them from looking to Bitcoin and to see what's their perspective as well on the current state of the market. So without further ado, let me say hello to Matt. How are you? How is it going?
Hello, I'm good, Mr. Trading Parrot. How are you?
I'm very good. And recently I learned that you're just a kind of a neighbor from me. So we are pretty close, also in UK. That's amazing. It's good to know that there's also crypto people in the neighborhood.
Yeah, it's nice. Only less than an hour away, so new crypto neighbors for sure.
Yes. And guys, if you are just joining the stream, make sure that you write comments and hit the like. That is really helping the channel to get more people connecting. I was in this video, we're going to look, as I said, at Bitcoin from multiple angles. And what are those angles, and why you think it's good to look into different perspectives to Bitcoin when you're doing your analysis?
So I think a lot of people potentially is, especially when they get first started with Bitcoin and cryptocurrencies, is they'll look at just the charts, or they'll look through a more traditional lens of analysis, which may be looking at just the fundamentals. And I think really need to take a much broader perspective. So not just on-chain data, not just technical stuff, not just macro environment. I like to really consider kind of every single part in harmony, because I think that's the best way we can improve our trading and investing when we look for confluence, when multiple metrics are pointing towards the same thing. So I think the foundational one, at least for me, is macroeconomic data. I think if we look to the previous cycle, we can see, especially for Bitcoin after the COVID, once we had the stimulus and everything, we saw huge Bitcoin run-ups, mainly just due to the money printers going. And then this cycle, there's obviously the halving coming up, the ETF. So just trying to take everything into account to try and get the best image possible.
And the website, it's called Look into Bitcoin. And but it's only focused on Bitcoin, or are you considering also including some other coins in the future?
We are Bitcoin specific.
Bitcoin specific.
There
And
has
well,
been
Bitcoin drives
discussions.
everything.
Yeah. I think a lot of people also do the journey where they first get involved in cryptocurrencies and they'll hear about Bitcoin, they'll maybe buy a little bit. But then, they hear about altcoins. I'm guilty of it as well. I've definitely done the same. And then maybe they dabble in Ethereum and then the next coin and then the next coin. And then before you know it, you're playing with, less than $1 million market cap tokens. And then I think a lot of people, especially in bear cycles, get burnt. They realize that 99.9% of these projects have, little to no utility or value. And then they
Yeah.
kind of circle back up. And a lot of people, at least in my experience, land back on Bitcoin. Maybe not 100%, but realize that really is the main focus of their crypto investments. I think it's the
Yeah.
driving force in all crypto markets. And ultimately, without Bitcoin doing well, there's a close to zero chance that other things will have a sustained positive period too.
True.
So
True.
this is what we look at. This is what we focus on. And really, even if you are interested in other cryptocurrencies, because of the correlation between 99% of the market, you can use a lot of these metrics. You can use a lot of this data to inform your investing and trading decisions in other markets. Because, like we said, Ethereum, choose whatever your favorite altcoin is. If you look at the chart compared to Bitcoin, obviously there's going to be a few different divergences, but 90% of the time they're going to match each other one to one. So a lot of the data is still relevant.
I have something to admit, Matt. I remember in the early days when I just got started with with crypto, and that was in early 2020. And I had done some trading before on stock markets and indexes, but never in crypto. And when I jumped into crypto, my focus was mainly TA, just looking into patterns and things like that, also indicators. And I started hearing other people talking about on-chain data analysis, other people talking about fundamentals, but even macroeconomic data felt to me too much to to take on, too much information overload. And one of the things that this website made really easy, number one, is that I wasn't ready to pay, for example, like $10,000 to get a Glassnode account, a professional one with all the alerts and things. So it, looking to Bitcoin was like really helping me transition into uh, covering more aspects about Bitcoin and started to be more an overall picture rather than that bubble looking into what's going on in the 4 hour, in the 1 hour, and then missing the big picture and then being wrong and then not understanding why. And the thing that changed completely my trading was getting the basic account on looking to Bitcoin. After using the free for a while, I jumped into the basic one and I started getting alerts. There are so many indicators that use moving averages in long time frames that you cannot be staring at those charts all day, and you cannot get an account on Glassnode to get those alerts either, because on-chain data is pretty expensive. And I think that barrier is completely removed with looking to Bitcoin, because it is low price to entry to get massive value. And after I got those alerts, popping into my email telling me that, for example, the pi cycle was crossing a bearish cross, at the top of the market, and right after we had a massive dump, and that was like a poke on my shoulder. I say, "Oh, wait a minute, what is this indicator? I never heard about it, and I'm getting an alert that we're getting a dump." And then that pushed me into opening that tab, looking back in time and saying, "Oh, look, this has played out all the time," And I started paying more attention to very key indicators. So I'm really keen for you to show us some examples of the different layers of this pyramid.
Yeah, of course. And I'll just add to that quickly. I've not been involved with looking to Bitcoin from the start. I was actually probably in a similar situation to yourself, where it was 2017 when I first got involved in crypto, and I was trading, and you were looking at all these YouTube videos and Twitter accounts, seeing how they were doing it and taking a very isolated perspective of the market. And it was
Mhm.
only afterwards that I heard about looking to Bitcoin. So I was a user for years. And even to this day, all of our on-chain metrics are 100% free. The only paid stuff is, like we said, the alerts and then some macro and portfolio data, which we'll cover today. But yeah, I think that was an eye-opening moment for me, knowing that Bitcoin as an asset, you don't have to just rely solely on the price chart. We can see, unlike any other asset in history, the movements of the most experienced, most profitable, largest participants in the market. We can see millions of wallets all at once, the trends that they're going through, the investor sentiment and behavior. So you get a
Mhm.
completely different perspective that you just don't get through any other means. So
Mhm.
this is why I find it completely fascinating, and why we kind of love showing people, teaching people, and helping people with their
Yeah,
Bitcoin investing and analysis.
yeah, yeah. Let's have a look some of the charts.
Yep, sorry, I'm just. This is my first live stream. This is the Look into Bitcoin's first live stream ever. So on our stream, I'm just giving this, your Trading Parrot stream, a bit of a shout out as well. Right, so we're all sorted. Onto the charts. So first and foremost, we'll look at this is one of the paid charts we have. This is in the macro suite section. So like I said, all of the on-chain Bitcoin focused stuff, 100% free. But for some macroeconomic data, some fundamental data, these are some site subscription charts. So if we just quickly flick back to this, what we're looking at here is layer one, which is the macroeconomic data.
Mm.
So like I was saying before with 2020, if the money printers are going, if everyone's very bullish, if traditional markets are in a very risk on sentiment, typically that's good conditions for Bitcoin. And I think if we were in a big global recession, central banks tightening their balance sheets, etc., it doesn't matter how bullish Bitcoin can look, it's really going to struggle to have these exponential run-ups if the macroeconomic conditions aren't correct. So first and foremost, we have the high yield credit cycles. I think our faces are actually covering the chart a little bit here. And what this is looking at is the traditional investor sentiment towards riskier bonds. So this is looking at corporate bonds, high yielding bonds. What we can see is when this is at a rating towards 100, this is almost like a traditional market fear and greed index. So a lot of people are familiar with the fear and greed index in crypto. It just measures the investor sentiment amongst the market participants. But in traditional markets, there's not anything that really outlines it as clearly as that until we came up with the high yield credit cycle chart. Now, what we can see here is very much coinciding with Bitcoin's peaks when traditional markets have a very greedy sentiment, when low yielding, fire expiring government bonds.
What does it mean, the change in the color?
So these are after the halving events.
I see.
So the Bitcoin 4-year cycle, we say typically is about 4 years long, coinciding with the halving event. We usually have, this exponential run up about 12 to 18 months after that, a year or two long bear market, and then we have kind of this middle transitionary period. So this is just to easily identify which period we're in. And this cycle, as is probably quite immediately clear, is looking quite similar to the previous cycles where, we topped out, and then as traditional market sentiment started decreasing, Bitcoin's price topped out and started decreasing alongside that. And then just prior to the halving event, we see this big uptick in greed, aggressive sentiment in traditional markets as more and more riskier, more speculative corporate bonds are seeming appealing to the traditional investor.
So one question, how can we interpret that we are still very low in this curve? Is it like we still have room to go to the upside because we are still very low in terms of the yield?
Yeah, so I think if you just look on social media platforms, TV coverage, whatever, I think you'll notice that a lot of people, even though we've seen, especially in indexes like the S&P 500, quite massive increases in price, especially in Bitcoin, quite massive increases in price, there still is this lingering, oh yeah, but we're about to hit this big recession. Things are about to get terrible. So according to all metrics, we're actually still quite early in this cycle. And I think a reason why we can maybe be a little bit more assured that this isn't just going to turn over and that's the end of the cycle is a few of the metrics that really point towards this continuing for at least another couple of years. And that's something like the federal debt. So like we could see in COVID, when the federal debt massively increased, the money printers are going, this basically incentivizes investors to look to harder assets because like we can see with inflation, prices of everything increasing, the purchasing power of your fiat currencies decreasing, you look to assets that can hold your wealth, that aren't going to deteriorate your wealth. So as soon as these money printers start going, sophisticated investors realize that I need to put my money into a better asset, something that's going to outperform inflation. So we usually see Bitcoin have these huge exponential run-ups once we see something like the federal debt increasing, which is pretty much a given. And that also aligns really well with the M2 money supply. So that was the debt. This is the M2 money supply. So this is the actual money in circulation, as well as money equivalents being the M2 money supply. And again, we can see a really clear trend, not just in the US economy, but this is looking at global economies and how when they're expanding their fiat circulating supply massively, this coincides with the Bitcoin price increase. And when they start to tighten this, again, Bitcoin starts to decrease in value. And if we actually look at the global M2 money supply versus Bitcoin on a year-on-year basis, there probably isn't a better, more accurate signal for timing your investments because they peak and bottom at literally the exact same time every single cycle. So it's one of those metrics that you look at and you realize and you think, wow, you could just look at this and, take a trade once every 3 or 4 years and things would be so simple. But it doesn't always work out like that, obviously.
There's another chart. I'm not sure if it's available looking into Bitcoin. Is the one I've been tracking a lot, which is the money printing in the banks in China. They tend to have a huge influence into what happens to Bitcoin. Every time that they start printing money, Bitcoin goes up, not necessarily right after, but there's some time frame, maybe 1 month or 2 months delay where you see divergence, but eventually Bitcoin always catches up with what the money printing is doing in China. It's such a huge economy, and it has a huge impact on M2 and the full picture of money printing.
Yes, that's why we really wanted to focus on the global M2 money supply, because we actually did a video a while back comparing the money supply in the US to Europe to the Asian markets, specifically China. And the
Yeah.
highest correlation was actually with the European markets, which a lot of people
Oh
maybe
wow.
weren't really aware of. But yeah, for sure, China has a huge influence on the markets just because of the size of their economy. And obviously the US, top dog. So obviously that has a huge influence on the rest of the
And
world too.
what's going on with M2 right now? I mean, has anything changed in the past, let's say, 1 month that we
Yeah,
should be
so we
aware?
actually saw quite a stark decrease in this metric,
Yeah.
which actually aligned with Bitcoin pretty much having a little bit of a retracement just a few months ago. But recently we saw a huge spike in this, which again pretty much coincided with the ETF approval. So there's a few things. This is why we look for confluence. If we're seeing positive fundamental events alongside positive macroeconomic data, that's obviously a very good sign. So we see multiple bullish catalysts at once. We see price rally from 50,000 to well above $70,000, and now actually this has started to decrease precisely alongside the Bitcoin price retracing as well. So
So what happens? What happened first, the pullback or the decrease in the M2 money supply?
so I suppose the most recent one, if we just look over the past couple months, specifically from the start of this year, it's
Hmm.
bit of a tight chat. We can see that this actually started to stagnate and decrease slightly while Bitcoin was sideways. And then as this started to more rapidly decrease, Bitcoin did the same. And then this actually pumped up a little bit before Bitcoin got its huge run up. So again, there might be a little bit of a delay. Once we see huge
Mm.
printing, maybe it takes a couple of days, a couple of weeks to actually
Yeah,
see that
yeah,
influence on the
I see the
markets.
same. Yeah, interesting.
Yeah, so that I think that covers a lot of the macroeconomic data. I think, like we said, if that wasn't looking healthy, if that wasn't supporting bullish conditions for Bitcoin, then the other conditions are going to have a much harder time having a positive impact on the Bitcoin price. So the next one, Bitcoin fundamentals, is one that's hard to ignore, is the Bitcoin halving event and the stock to flow model. Whether you're a believer in stock to flow or not, whether you believe that maybe this model just got lucky, because it's obviously a very controversial one, I think it's hard to ignore the influence that the inflationary rate of Bitcoin decreasing by 50% has. Even if you don't believe that Bitcoin may hit hundreds of $1,000s post this halving event, I think it's pretty undeniable that it's at least going to be a positive for price in the long term.
Yes. I have two things to say. One thing is, which of all the charts that we are seeing are part of the free tier? That's one question. And the second one is, if there are people that may be having some technical issues to hear me in the other stream in your channel, Matt, and some people are saying in the comments that they cannot hear me. So if you don't mind telling them that if they cannot hear me, they can jump on my stream if they want to hear me, unless they just want to hear you.
Yeah, as I said, first one ever. My bad. Please go. Uh, this will be fixed for next time. It's just one of those little
Yeah, yeah.
hiccups we have. I'm sure. So back to your previous point, all of the charts we looked at previously were macroeconomic data. So those are paid for charts. However, the global liquidity chart, we actually do have a sample free version here. So if you click on that, then you'll get a little bit of a taster of that global liquidity chart, which is probably one of the most important ones we have. But from here on out, pretty much all of them are actually free charts because they're Bitcoin specific on-chain data. So the stocks flow is a free one. If you go on to Bitcoin, look into bitcoin.com, all of these charts are completely free. The only thing you're paying for past that would be the alerting and TradingView versions
Mhm.
of a lot of these indicators as well. But as for the stock to flow, did you have another question I've maybe forgotten?
No, no, no. Well, I was just gonna say that the stock to flow leaves me a little bit with a smile because, in the past cycle, what we had, at least my thesis is that the whole cycle had a kind of a breakdown, and it entered in the arena of the previous cycle. It's kind of I'm going to show you later some charts where I can see that the full cycle from 2019 until the bear market got shifted down a full level because of COVID. And because of that, it didn't only break the stock to flow model, it broke also some of my models. And it makes it look like if the previous cycle, the cycle of COVID, is part of the 2017 cycle. In many aspects, it remains, some oscillators remain like if we never flip to another cycle, like if those two cycles, 8 years, was a single cycle, like a super cycle. And it's very clear. So I'm tempted to tell, this dude from Stock to Flow, the creator, that it's not that it's broken, it's just that it was a pandemic and it kind of squashed things. But I'm very interested to see how the Stock to Flow is going to evolve from now, whether it's going to catch up or if it's going to still remain a little bit squashed below that line.
Yeah, so I've talked to Plan B a little bit. He's a nice guy. And there's actually a few different iterations of the stock to flow. This is the original one. He has other valuation methods which put Bitcoin at higher prices or slightly lower prices in line with the stock to flow of other assets like gold and silver, etc. But this is the original one which we're sticking to. And I think this cycle is really going to be the one that either proves or disproves stock to flow. Because, like we said, obviously up until this point, it looks great. The previous cycle was a bit of a peculiar one. COVID definitely had an influence, potentially positively in the printing, but negatively in that the long-term negative impact of that. So it'll be interesting to see after this halving event and in the next couple of years how price actually reacts to stock to flow. But like we said, undoubtedly, there is going to be a positive price impact after the halving event. And one of the main reasons for that is the miner revenue gets cut 50%. So the amount of Bitcoin coming into the market decreases by 50%. And a lot of miners actually have to fund their operations by selling BTC. So suddenly overnight, their revenue is just cut in half. One, that's less Bitcoin being dumped on the market. But secondly, they need a considerably higher Bitcoin price. They basically need the Bitcoin price to double to maintain the same level of profitability. Sorry. So it maybe incentivizes them to hold on to their coins a little bit. So then we get into a little bit more of a supply and demand economics discussion where there's less inflowing coins onto the market, less selling as well. And then the demand's probably increasing because people are being more and more aware of the fact that this is one of the hardest assets, if not the hardest asset known to man, with its limited supply and decreasing inflationary rate.
Cool. It's very evident what's going on there every time it goes lower, half and half.
Yeah, it's one of the simplest ways to really look at it. Obviously, stock to flow is great, can get a little bit complex, but you can just look and see, miners go from 1900 BTC per day in block rewards down to 8 and 900, and then it's going to be 400, 450. In a few decades' time, they're going to be fighting over, fractions of one Bitcoin. So really, when you take that into account, maybe people aren't really pricing in the future of Bitcoin as well as they potentially should be. A lot of people are looking at, what's the next month going to do? What's the next year going to do? But really, if you're looking at a 5 to 10 year perspective, even longer, the asymmetric upside is just unlike any other asset. You take into consideration everything we've discussed so far, but then other things we're going to mention, the ETF, the illiquid increasing supply, everything is basically pointing towards Bitcoin continuously increasing on a cycle by cycle basis. Obviously, we're going to have some big drawdowns. We're still a small asset class, still probably a little bit more risk on speculative, but ultimately the maths is just in the favor of Bitcoin increasing in value.
Yep. I wish there was a way, I was thinking, to get the miner revenue minus their costs to see how much they're actually taking in. I'm not sure if that exists in some way, because it depends as well, because there are miners across the whole globe. So some of them may be experiencing less costs in energy because they depend fully on energy, and energy's costs are going higher. At the same time, they're being paid less. So I wonder for how long they can stick around, without going bankrupt.
Yeah, it's one of those where it's a bit of a gray area, educated guess when it comes to estimating the cost of mining a Bitcoin, because obviously there's so many factors at play. I don't know the exact numbers, but this is one chart which can kind of show the miner revenue in a comparison to a historical average. So this is the Puel multiple, which is using Bitcoin denominated in US dollars
Hmm.
and is looking at their daily earnings and comparing that to a yearly average. And again, this is another metric which has been absolutely great at timing your Bitcoin buys and sells, because you can see when this is at the one line, it means that the daily earning is in line with the previous yearly average. When this is substantially lower, 0.3, that means they're earning less than a third of what they had over the previous year. And when it's up here, we're getting values of 6, potentially 7 plus. They're earning huge amounts, gives them more incentives to potentially start offloading some of their Bitcoin. So something like this doesn't give the exact thing you were asking, but is a good way, again, we can kind of reference how much money miners are earning. And
Yeah.
a pretty interesting thing to look at is if we just look over the previous 2 cycles, we can see that this decreases massively pretty much overnight when the halving event happens. So we are going to see in 3-4 weeks time the Puel multiple drop from its current level down to probably, I had to guess, 0.8, 0.7. So
Hmm.
they're actually going to be earning significantly less than they have been for the previous year, even after our rapid price increase, just due to the fact that they're going to be earning less and less BTC.
And do you think that, historically, there's this expectation just based on past performance that prior to the halving or very close to the halving, there's some sort of pullback? Do you think there's a way to explain logically why is that pullback expected? Is it necessarily to do with the halving, or is just the timing, or there's always something going on that creates that pullback?
So I guess these fundamentals kind of align with the on-chain data perspective as well. And
Hmm.
this kind of gets into more investor psychology. And this is another thing we can track really well with Bitcoin, because we can see all the addresses, we can see all the Bitcoin and see the on-chain data. And I think a lot of people are aware of the halving event, and it's almost a buy the rumor, sell the news type
Yeah,
thing. So I think a lot of people are trying to front run the event because we see this exponential price increase because it is a very bullish event. But at some point, everyone says this can't go much longer. Now it's time to lock in some profits. So historically, we do actually see quite a retracement just prior to the halving event, and maybe not an immediate bullish rebound, but I think after the halving event, once kind of the selling has settled, everything is in place to have a solid foundation for the next leg of the bull cycle.
I see. I see. And so, sorry, we have cover fundamentals, macro. So we could look into some. Well, so you cover as well some on chain.
Yeah, there's a lot of crossover. Okay, so a lot of the on-chain are also technical, and a lot of the
Yeah,
fundamentals are also on-chain.
true.
But this on-chain data metrics, a new one we have, and I think is a really good way to kind of outline, again, kind of the Bitcoin fundamentals, but also the on-chain data we've been seeing. So recently we've seen, this is the long and short-term holders, the amount of circulating Bitcoin that is held by short-term, more frequent traders, investors in the market, and long-term holders who have been holding their BTC for an extended period of time. And we can see, like we see in every cycle, as Bitcoin's price starts increasing, like we've seen just prior to the halving event, post ETF launch as well, lots of coins are being passed from old hands to new hands. This is usually a good indication that longer term investors in the markets are beginning to take a little bit of profit, because unfortunately, which we'll see a little bit more in a few other charts, a lot of retail, a lot of short-term holders are typically terrible with their Bitcoin investing. A vast majority of market participants tend to buy the top and sell the bottom. And following the herd is one of the worst kind of investment theses you can follow. You almost need to act as a contrarian to your own emotions a lot of the time, not just the market, but we've all been there when Bitcoin's declined 70, 80%. It feels scary. When Bitcoin's up 700%, it feels amazing. So you kind of need to act in the opposite way to what feels maybe instinctive. But we can see a lot of coins just being passed from old hands to new hands. But one other interesting perspective is, I've already got the lines drawn up here, we're seeing this huge trend that over every single cycle, there is less and less Bitcoin available. So even though we have these cyclical bull cycles, bear cycles, every single cycle, there is less and less Bitcoin that is just available for new people to buy. I think especially now with the ETF, we're getting a lot of people with much longer time frame horizons for their investments. They're not looking at next 1 or 2 years. They're looking at the next 1 or 2 decades. So maybe not this cycle, but maybe the next cycle or the cycle after that. It's going to get to a point where potentially over 90% of BTC is just held by long-term holders. And at that point, the amount of capital that needs to actually inflow into the markets to increase price decreases substantially, because every single purchase has a much higher impact on the market cap of BTC.
Very interesting. And one of the things I love about the website is that you get alerts, but you can opt in for the alerts, obviously, if you go for one of the paid subscriptions. And the alerts are very well picked. They're cherry picked to be the most meaningful ones. You don't get overflow with alerts on your email. For example, for this kind of charts, when there is some significant event, you start getting them. And well, oh, this is new. You can opt in per
Yep.
indicator. I didn't see
Yep.
that before.
Yep. I had to show off every cool feature we've got. So,
Wow.
yeah, like you were saying, a lot of the alerts don't happen that frequently. But when the pi cycle top indicator flashes a sell signal,
Yeah.
you need to be ready to act.
You must know.
And
Yeah.
yeah, of course. And when the MVRVZ score is flashing a buy signal, you need to be ready to act. But if there's some of these that you don't necessarily align with, some of them that don't fit to your strategy, maybe like the active address sentiment indicator, which is a much shorter term chart, which we'll look at a little bit later.
Which I love. I love using that one.
Yeah, me too. But if you're a long-term macro investor, then that's probably not relevant to you. You can turn that on or off. But I'll be honest, a lot of the content I make is just based on the alerts I receive, because it's so much easier to just manage everything like that. A lot of the investment decisions I make are based on the alerts I receive. So that is super handy. Obviously, you don't have to do that. You can just look at the charts. We can check all the on-chain data. This is all free stuff, the on-chain Bitcoin stuff. So you can just check this frequently. But especially for me, I like to think of investing not as a way to obviously get incredibly wealthy, but I want a huge amount of time. I don't want to spend hours and hours a day doing this. So
True.
one way we want to kind of frame look into Bitcoin as a way to not only improve your investing, but also to really simplify it and be a time-saving tool.
Yeah. And it's also very educational, because whenever you receive the alert, it's not just telling you the Pew multiple made across above 0.5. What does that mean to me? Nothing, especially if I'm a beginner. But the email contains also some interpretation. Obviously, it shouldn't be um, taken as financial advice, but most of the time when you get the alert, it tells you typically after this, most of the time, this happens. So you just become aware that there's some significant risk that is coming in, and making you aware. So in a week like last week, when we were topping at 73, I was getting alerts all the time. Like every single indicator from all the four pillars were saying, hey, we might take a breather here. This cannot just go endlessly parabolic to 100K pre-halving. And I was kind of my job was to make people aware of those things. But throughout the full week, most of the comments were like, you're crazy, you're crazy, you're crazy,
Yeah, so pretty much everything was pointing towards us getting a little overheated in the market. This is the value days destroyed, which is a slightly more complex metric we have, but really outlines kind of how overextended we probably were to the upside. Like I said, this is one of the more complex ones. This is using something called coin days destroyed. So, as a very quick example, if I held one Bitcoin and then held it for 10 days and then sent it, then I would have added 10 coin days destroyed. If I had 10 Bitcoin and held it for 10 days, it'd be 100 coin days destroyed. So this is kind of trying to give more weight and more influence to those that have held a larger amount of BTC for an extended period of time. Because if lots of people that hold a fraction of a Bitcoin are taking profit after holding for a week, that's not nearly as influential as someone that's held it for a decade that holds hundreds of Bitcoin. So we could actually see the value days destroyed, which is looking at a recent average of the coin days destroyed multiplied by the current price to a longer term average. We could see that a lot of these influential wallets were actually seeing this as a good opportunity to start taking some profit on their positions. And you can see by this just super red, scary looking metric here that this got pretty much to a level that you see very late in bull cycles. This doesn't look like a early transitionary bull cycle period prior to a halving event. If anything, this looks like something you'd see, with only a few months left, which a lot of the other metrics don't point towards there only being a few months left, but it definitely points towards at least being a cool-off period.
True. It's also very useful to focus on the green areas, like during the bear market and even during this bull run, during this rally, and we can see that those green areas are pretty much the best entries in the past year.
Yeah. So I mean, even obviously down here in the very tail end of the bear cycle, it was obviously very green, indicating a good area to accumulate. But even on the most recent pullback, when we went from about $32,000 ish down to $26,000, it was only for a brief period of time. But even on that, you could see long-term investors weren't taking profit. They weren't panic selling. They weren't transferring their old coins to new wallets because we had a little bit of a pullback. They saw that, if anything, as an opportunity to probably accumulate more, which gave us this green signal to say this is a great risk to reward area to accumulate BTC.
Yeah, I have a question, but I might need you maybe to answer it for another video, because I would like to know, in your opinion, what's like the top indicators that form part of your checkboxes if you were to, let's say, in the bull market, add more to your position more heavily. Like, for example, now we're having a pullback. What will be the indicators that you will look into to say, well, this might be a safer zone to re-enter because we have already cooled down enough for being in a bull run?
So, good question. One of the newer metrics we have, I think, does an amazing job at this. So the realized price, very quickly, is, when you're looking at the entire realized price, is the average price at which every Bitcoin on the network was last sent. So it's taken into account every single transaction, aggregating every single Bitcoin transaction to see the price at which we sent that. And we can almost assume this is the cost basis, the average accumulation price of BTC. And what we can also do is differentiate short-term holders' realized price and long-term holders' realized price. So the short-term holders are people that haven't been involved in the market for too long, and we can actually see how much they are paying on average for their Bitcoin. And if we just zoom in here, we can see that typically once Bitcoin retraces to the point of break even for all short-term traders, that's usually a pretty good entry price. We can see it in the previous cycle. Every time we retrace back to this line, indicate that short-term market participants were actually break even. Maybe at that point they're capitulating a little bit. That's a pretty good price to re-enter. It even happened in this cycle on, if you include that one, 4 different occasions already. And each time it was very short-lived and a golden opportunity to accumulate more during a bull cycle. And during the bear cycle, it actually provided a great level of resistance to potentially add to your short positions or take a little bit more profit on rebounds. Because again, probably gets to the point where prices rebounded, short-term holders see that they're break even again. Maybe they begin to take some profit, or maybe it's just the market being cruel and punishing them even more, and we see even more of a retracement. But especially in the 2015, 2016, 2017 cycle, I mean, this line was just perfect every single time, every single retracement by that point. And, there wasn't a lot that could really go wrong. Obviously, you want to be taking profit up here, but for reaccumulating during a bull cycle, which I think is a very hard thing to do, not just in terms of technically the levels identifying them, but psychologically knowing you're buying at a higher price, you really need to focus on the best risk to reward rather than just, I could have had this much BTC, so I'll buy now. You need to wait until the market conditions are very favorable and the probabilities are in your favor.
Yeah, and it also becomes resistance during the bearish parts of the price action, I can see.
Yeah. So this is it's almost like a moving average, but based on real on-chain fundamental data.
Yeah. Something I was going to ask you is this one available via alerts, or this one
This
is?
isn't available for alerts yet.
Okay, it would be great if this was available for alerts, especially
Yes,
when you get closer to it or you cross under. I'm very interested to know when that happens.
I don't think there
And
is.
by the way,
No.
Matt, if you don't know, guys, he's an advanced Pine script developer, and he has built many of the indicators. Because actually, looking to Bitcoin is also offering private invite only scripts as well. I have access to many of them because I've been paid member for about two years, I think, and now thanks to you, I became like a pro. I have access to the pro, so thanks for that. That means as well that I'm going to have access to more charts, more trading view indicators. And which ones are the indicators? Do you have them somewhere all together? Are they
Uh,
as well like macro indicators or
yeah. TradingView access. Oh, here we go. Here's all the indicators you get.
cool? And all of that via trading view.
Yeah, so I've not got all of them loaded up here. These are just the ones I use for my trading. So the golden ratio multiplier is handy to see moving levels of support and resistance. The pi
Hmm.
cycle top, which I'm going to be watching very closely for a cross. And then something like the Crosby ratio, which is one of our portfolio tools. This is actually a paid indicator, but you also get it available in TradingView. And what's handy about TradingView stuff is you can actually apply all of these to different tickers. You don't have to use them on Bitcoin. They all work fine on Ethereum if you want to do that. They all work on different time frames if you want to trade a little more frequently on the hourly chart, 4 hourly chart,
Yeah.
etc. So they all scale down to that. So I use them every day.
Yeah, it would be nice if one day I look into some of these indicators because I have a big interest for backtesting strategies and automating strategies as well. So, like the one that you were just showing me is like an oscillator. I'm pretty sure that I can turn that into a signal and see how profitable is in the 1 hour, 4 hour time frame and stuff like that. Interesting.
Yeah, we have some very cool things planned in that regard as well. I won't say too much about it because it might be a few weeks away, but we do have some very cool stuff in the works that I think you'll appreciate. I'll maybe tell you off stream. But back to the final column, which is the technicals. We've covered macroeconomic, fundamentals, on-chain data. And again, there's a little bit of crossover here, but the technicals are the more shorter term based signals you'll get for like the short term realized price reaccumulating during a bull cycle, levels of resistance where we should potentially be taking some profits. So obviously the pi cycle top is a great one, but some other ones, like you mentioned, the active address sentiment indicator, which gives this quite weird looking metric at the bottom, but this is looking at the 28-day percentage change of active network users compared to the 28-day price change. It's basically looking for divergences between, oh, prices increased quite rapidly, but we've not seen a huge increase in network activity. Maybe this huge price increase isn't sustainable. And same is true for the downside. Maybe we're seeing, oh, prices decrease massively, but the network's actually growing in usage. So surely this can't last too long. And historically, again, this has been a very accurate signal at calling more short-term moves in the market, especially when this crosses beneath this upper red deviation line, usually coincides with a little bit of a retracement in price. And once we
Yeah.
cross up above this lower deviation line, again, pretty much called the exact bottom to perfection at 42K before we had a $30,000 price
Yeah.
increase.
I always use this indicator actually in many of my videos in the past 2 weeks. I pop in this particular one specifically because we were crossing the red and we were printing like a very pointy kind of toppy area there when we were at 73. I compare it to the previous times, and like 90% of the time that we do something like that, then it's just going down, with the exception, obviously, of blow off tops where things go out of control and you can stay toppy for very long. My argument against that is that, well, if we do that now, that will make it this the end of the bull market, because being in a blow of top so early, it might run like crazy, go above 100K, and then that will be it, because after the cycle gets burned by a blow of top, then a lot of investors take their profits and they just call it. They just say, okay, that's it.
Yeah, so I suppose that leads into the potential for a double cycle. I mean, we've had a bit of a blow off top now, kind of as a mini bull market cycle before maybe a pullback. But if we do increase more, then I would maybe think that a double peak cycle is a possibility. So we've only had this once, which was in 2013, where we had this huge run up in price and about
Yeah.
50% retracement, but only a quite short-lived drawdown period before we had another peak. A lot of people like to say the previous cycle was a double top, but those all-time highs were practically the exact same price. So that
Yeah.
one's a bit of an odd one. It doesn't really take into account. So the previous cycle in 2013 was a definitive double peak cycle, which had this huge exponential run up, cool off, and run up. So it could be that we see something like that again.
Yeah, yeah, it could be. By the way, we have like 10 minutes left, and I would like us to cover some of the questions from people. And I would like also to give an update on the setup that I posted this morning, if you don't mind, Matt.
Yeah, of course.
That's on my chart. I'm gonna be very quick. So I'm gonna take 5 minutes to give an update on my setup. This is my setup. This is on the 4 hour. I'm trading the RSI, and we have this big structure here. I'm just going to mute this for a second. Let me remove this one. Perfect. So we got this big structure here that we've been looking at from practically end of January, and we broke below, and we have this red line there. We were expecting yesterday to see a breakout to the upside right here, because once we are above the red line, I was expecting to go and revisit the structure, but this time as resistance. That was at an RSI of 56, and we made it to 57. So we were very close to the expectation, and that took us to our price target of the target was 67.5, but we actually made it to 67.9. And right after that, I started seeing this morning that we have this low, we have this head below here, and there's some kind of messy right shoulder there, that it's about to get invalidated. But as I said, there's no trade if we don't cross and don't close the price above 68, which we haven't done. So there's still no trade, and the price is coming back, and potentially it might make this right shoulder slightly bigger, maybe wider, because it might take a little bit longer. That is still valid until we get to this low end here at 64.3. So we can still come back down here and then make a final attempt to break 68. And that will put back in place that target of 75, which is a high risk setup. And we must wait for confirmation above 68, which we still don't have. I'll keep you updated. Follow me on Twitter. Trading Parrot is my handle. And as soon as I see something significant, whether I discard the pattern because it got invalidated below 64 or it broke above 68, and I'm looking into other aspects to consider it or discard it, I'll keep you updated on Twitter. Back to Matt. Thank you for that.
Great
And
analysis.
let's go through the questions, and I want you to cherry pick the questions. I don't know if you can tap on the questions from the chat panel on Restream, and maybe pick the ones you like the most. There are some questions that are coming via your channel, some of them from my channel, but we can click on them and show them, display them on the screen.
I'm not sure I can click on them, actually.
For example, I'm showing this one. Mickey saying really great indicators and website.
No,
And
it's going to be up to your jurisdiction. So
okay,
any questions I'm happy for.
can you see this one?
Yep. Are we planning to offer an Easter discount? When is Easter? The next weekend?
Yes, next month.
I can't say for certain it'll be an Easter discount, but we'll do a discount in the next couple of weeks. We'll figure something out, and yeah, we'll definitely offer a percentage off in the coming future, not too far away. So keep your eyes peeled on the site. I can't say exactly when because I can't just promise discounts without some permission from the higher ups, but we'll sort out some discounts soon.
Cool. And the next one is some are saying that the pivot is confirmed, maybe June, maybe September. In your opinion, how is that going to influence Bitcoin price before, during, and after the bull run?
Is this in reference to the pivot in fiscal policy in the US?
Uh, I don't know, but I guess so.
Okay. So we do have some federal funds rate, federal targets rates, and a lot of other macroeconomic data. And I think it's one of those that you don't necessarily need to wait for the hawkish or bullish news fundamental releases. One thing I like to look at in place of that is the US Treasury market, because this kind of prices in not just an immediate decision, but we're looking at kind of 3 to 6 months forward facing to try and price that in. So a lot of shorter term US treasuries, which we have on the site, like the 1 year and the 2 year, actually reflect and almost predict these moves before they happen. And once we actually see those treasury yields start to decrease, it usually coincides with more risk on sentiment, more risk on market conditions, which are usually very bullish for Bitcoin. So I'd say as soon as we start seeing the treasury yields start to decrease noticeably, it's probably time to see we're going to see some fireworks.
Cool. And we have some questions from Angela. And dear Matt, MicroStrategy's convertible notes offering to buy BTC repeats. It poses a query. Is it loan funded Bitcoin investment for private investors smart?
It's an interesting one, because Saylor's either going to go down as one of the best, smartest investors of all time, or things hopefully don't go south. But if they do, it's going to go south catastrophically and be terrible, not just for Saylor and MicroStrategy, but also for Bitcoin. Any kind of derivatives, any kind of loan based purchasing, I wouldn't necessarily recommend. I think unless you can afford to actually pay off that debt, then it's probably too risk on for me. And it's probably not too healthy for the space either. I would say derivatives don't necessarily do more harm than good to the Bitcoin market. But if all of the open interest we're seeing in Bitcoin perpetual futures actually went into buying spot BTC, they'd make far more profit than they would trying to leverage trade the 5-minute chart. So I would say loan funded Bitcoin investments probably a net negative for the market, because we also have to consider at what point does Saylor potentially take profit. I know he said a million times he's not going to take profit, but if he's taking out all these loans to buy more and more BTC, if at some point he's a 10 trillionaire, maybe he cashes out, maybe he dumps the market. Who knows? So I would prefer a more organic growth to the cycles.
That's true. And before I read the next question, I want to ask you guys honestly, if you like this stream, this collaboration, and you think that we should be doing more videos like this as part of the Trading Parrot channel and the Look into Bitcoin channel as a collaboration, make sure that you make us know that. And the way you can do that is by leaving a comment in my channel or in Matt's channel, and make sure that you're very loud, all of you, if you like it, if you want it to happen once again. Will really appreciate your feedback. Also, if you have something to add, like don't talk too much about this, talk more about these other things, and any feedback is valid. We will go through all your comments and try to react to your preferences. The next question is from Pablo Campana. It might be important in this cycle that it is no longer the goal of many to have one Bitcoin. Now, with ETFs, anyone who has a percentage of their portfolio in Bitcoin feels that they have Bitcoin.
100%. I feel
Agree.
like there's definitely a unit bias, in cryptocurrency that probably shouldn't be as influential as it is. But a lot of people may see the price of Bitcoin and say, oh, there's no point in buying it because it's too expensive. I'll buy Dogecoin because I can buy 1 million of them. Whereas I think a lot of sophisticated investors who, have a traditionally 60-40 investment portfolio in stocks and bonds, they don't brag to their friends, oh, I have 1,900 S&P 500 equivalents. They say I'm risk on, I'm 60% equities. Maybe now they say I'm 10% Bitcoin. I've also seen a lot of pension fund providers and index providers are now actually including Bitcoin as a fractional inclusion of a lot of these indexes. So a lot of people that maybe want a tech-focused exposure to the market unknowingly holding Bitcoin through an index. So yeah, I definitely could see that transition.
Yeah. And this is just the last question, just because we ran out of time. And I am interested in your opinion, data about stock to flow versus the power time law, which will deviate a lot in the upcoming cycle. And the power time law.
It's similar to the logarithmic growth curves. We don't have the power time law. I think it's the power time law corridor, as it's more officially known. We don't have that link into Bitcoin. It's one of those interesting ones. The logarithmic curves go back as far as 10 years since the first person kind of modeled out how Bitcoin over time is going to have diminishing returns, but on a logarithmic chart, it still has exponential price increases. But it's one of those models that at some point is going to break. I think stock to flow, like I said, even if you're not a firm believer in the valuations that stock to flow provides, I think it's still very important to understand the positive influence that the halving event has on price. Even if you don't think Bitcoin can run to $500,000 in this cycle, undoubtedly people are going to look to and talk about Bitcoin more because of this event. Whereas the power law corridor, which is 3 lines drawn on a chart, mapping out where the peaks and bottoms are, we can just adjust that. If that fails, that's not a real fundamental on-chain piece of data. So that can kind of be fit to someone's personal bias. And it's almost certainly not going to last forever. Most charts aren't going to last forever, but at least with the on-chain stuff, as opposed to the market cycle stuff, we can see the real human psychology behind investing and trading, not just, price levels on a chart.
Makes sense. Well, Matt, this was really a pleasure. I think I really like having done this video with you because I resonate with the approach of incorporating multiple angles to see the price. I think people that watch my channel are used to seeing me jumping from TA to fundamentals to macro to on-chain data. And I have to say, a lot of that was influenced 2 years ago. At least it started with looking to Bitcoin when I was looking to expand my horizons. And I think it's really a great website to get everybody more aware of absolutely everything. And by the way, there's no referral, there's no affiliate, there's nothing. All I'm getting is new friend, new collaboration, and access to the premium myself. But if you use the link there, it's just pointing to look into Bitcoin. There's no referral code or anything for me. It's just because I organically have been a paid user.
That's what we want. Obviously, yeah, we've got you a premium sub, but I think a lot of the referral link affiliate program kind of incentivizes people to just post a look into Bitcoin link, and maybe they don't use the platform. We want people to actually use the platform and share it with people, like you said, organically. So I really appreciate you having me on. This has been a really great chat, and it's been great to meet you and get to know you just prior to this call as well. And it's nice to know that there's a neighbor not too far away that we can potentially meet up for an in-person collaboration at some point. But yeah, it's been great to be on here and chat to you about Bitcoin and all the crazy price chart movement we've had recently. And it'll definitely be something we should do in the future.
Awesome. Thanks so much, Matt, for coming to my channel. And thanks to everyone that is in the live stream. It's been awesome. And don't forget to leave comments and leave likes and be as loud as you can to make sure that we understand that you want more of the streams next week. And if we get enough comments, who knows, maybe we start doing some series or something like that. All right. Thank you so much. See you on the next one. Bye-bye.